XRP has spot ETFs. It has a live EVM sidechain with developers flocking to it. And its parent company, Ripple, is on a multi-billion-dollar acquisition spree, buying up the core infrastructure of institutional finance. By every conceivable metric, the fundamental case for XRP has never been stronger. And yet, its price has been stuck in the mud for months, chopping sideways while millions of holders are left staring at their screens, asking the same question: what on earth is going on? Is this the final consolidation before the next explosive leg up? Or is the crypto bull market quietly dying, leaving XRP vulnerable to a brutal return to its bear market lows? Well, today we are going to dissect the anatomy of XRP's perplexing price action. We'll break down every major development since its last rally, including Ripple's strategic war chest and the star-studded Swell Conference currently underway in New York. We'll analyze exactly how the market has reacted to this onslaught of bullish news and, more importantly, why. And finally, we'll look at the powerful catalysts and the dangerous headwinds on the horizon for November and December that could finally decide XRP's fate for 2025. My name is Lewis, and if you're an XRP holder, this is one video you cannot afford to miss. First things first though, none of this is financial advice. I'm just the guy on the internet with a spreadsheet addiction, here to explain the forces of shaping the XRP ecosystem. If that sounds good, then show your support by smashing that like button. Okay, let's start with a simple fact. Since July of 2025, the XRP ecosystem has undergone a massive transformation. At the heart of this campaign is Ripple Labs, which has been spending money like a drunken sailor on shore leave. In 2025 alone, Ripple has spent nearly $4 billion on strategic acquisitions. This isn't just buying up small startups. It's a calculated conquest of the financial world's plumbing. It started with the $1.25 billion acquisition of prime brokerage firm Hidden Road, which has since been rebranded to Ripple Prime. Then came the $200 million purchase of stablecoin payments platform Rail, followed by the $1 billion acquisition of Treasury, a treasury management software firm used by Fortune 500 companies. And just this week, on the eve of their Swell Conference, they announced the acquisition of crypto wallet and custody firm Palisade. So Ripple isn't just trying to partner with the old guard of finance anymore, it's buying them outright. At the same time, the XRP ledger itself has been getting a massive upgrade. The much anticipated EVM Sidechain, developed by Persist Technologies, finally went live on mainnet in June. This is a game changer, as it brings Ethereum's smart contract capabilities to the XRPL, connected by the Axelar bridge, with XRP as the native gas token. The goal? To create what one developer has called, quote, the biggest onboarding in XRP history. And the early signs are promising. According to Persist, a staggering 87 new entities with no prior involvement in XRP are now building on the sidechain. Projects like Strobe Finance, Vertex Protocol, and Ellis are bridging DeFi to a ledger historically known only for payments. Even the ecosystem's most popular wallet, Examine, formerly Exum, has been rolling out major upgrades, including a decentralized swap feature and a 10x faster onboarding process. So you have a multi-billion-dollar acquisition spree, technological leap with the EVM sidechain, and a flourishing developer ecosystem. So how did XRP's price respond to this tidal wave of positive news? Well, it didn't. In fact, it's a textbook case of sell the news. When the EVM sidechain launched on June 30th, a monumental achievement, the price saw a pathetic 1.8% bump, well, before fizzling out. When Ripple announced its billion-dollar acquisition of Treasury in October, price barely flinched. Even as multiple spot XRP ETFs went live in the US and Canada, the initial excitement quickly faded, with XRP's price falling nearly 35% from its July peak of $3.65. This has become a maddening pattern for XRP investors. Every single bullish catalyst has been met with either a brief, unsustained pump or worse, complete apathy from the market. It's a classic case of speculative front-running, where traders buy the rumor and then dump their bags the moment the news becomes official. And that brings us to this week's main event, Ripple's annual Swell Conference, taking place right now in the heart of New York City. This isn't just another crypto conference. This is a Wall Street summit. The speaker list reads like a who's who of global finance. You have the CEO of NASDAQ, Adena Friedman. You have executives from BlackRock, Citi, Franklin Templeton, BNY Mellon, and Fidelity. And in a historic first, a senior policy advisor from the White House Digital Assets Council is also attending. The agenda is laser-focused on the very things that Ripple has been building towards: tokenization, prime brokerage, stablecoins, and institutional custody. And the announcements are already rolling in. On the first day, Ripple confirmed that its stablecoin, RLUSD, has officially surpassed a $1 billion market cap in its first year of operation. That is an astonishingly rapid rate of adoption, proving that institutions are hungry for a regulated, bank-backed stablecoin. So, with the world's financial elite gathered in one room to discuss the future of an XRP-powered financial system, surely this must be the catalyst that breaks the curse, right? Well, in the week leading up to Swell, XRP's price actually fell by 7.5%. The market has become so conditioned to selling the news that it's now selling before the news even happens. It's a brutal psychological game. But before you lose all hope, it's crucial to understand what's still in the pipeline for the final 2 months of the year, because the biggest catalyst may be yet to come. Navigating this kind of market, where fundamentals and price seem completely disconnected, requires access to reliable exchanges and the right tools. And if you're looking for the best platforms to trade XRP, or any other crypto for that matter, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges around. To get these goodies, all you need to do is hit the link in the description or scan this QR code. Once you get on the deals page, find a deal that suits you and click one of the Sign Up Now buttons. But remember though, these deals won't be around forever, so take advantage of them while you still can. Okay, so despite the frustrating price action, the fourth quarter still holds a few massive cards for XRP. And the first is the final verdict on the spot ETFs. The SEC has a deadline of November 14th to make a decision on Franklin Templeton's spot XRP ETF application, with market data platforms like Polymarket showing a greater than 99% probability of approval by the end of the year. This is less of a question of if and more of a question of when. Analysts at JP Morgan estimate that XRP ETFs could attract between $3 to $8 billion in capital inflows within the first year alone. The second, and perhaps even more powerful catalyst, is the rise of the corporate XRP treasury. A Ripple-backed company called Evernorth is in the process of merging with a SPAC to list on the NASDAQ under the ticker XRPN. Their stated goal? Well, is to raise over $1 billion for the sole purpose of accumulating XRP in the open market. That means that there could be a publicly traded company whose entire business model is to become a massive, long-term holder of XRP. And the crazy part? They aren't alone. Firms like Trident Digital and SBI Holdings in Japan are building their own multi-billion-dollar XRP treasuries. This creates a structural, long-term demand for XRP that is completely independent of retail sentiment. And finally, the XRP ledger itself is due for another major upgrade before the end of the year. Ripple plans to introduce a native lending protocol directly on the ledger, which it describes as the, quote, most significant near-term milestone. This, combined with new standards for tokenized assets like multi-purpose tokens or MPTs, is designed to turn the XRPL into a hub for institutional DeFi. So the stage is set for a potentially explosive end of the year. But, and this is a big but, XRP is not operating in a vacuum. It faces a formidable wall of worry, composed of forces both outside and inside the crypto market. First, there are the macroeconomic headwinds, with the Federal Reserve hinting that interest rates will stay, quote, higher for longer, and the US dollar remaining strong. The flow of global liquidity into risk assets like crypto has been choked off. As long as you can get a safe, high yield from treasury bonds, the incentive to gamble on crypto is significantly reduced. Second, we have the crypto-specific factors, namely the king itself, Bitcoin. Bitcoin dominance is currently hovering around 60%. This means capital is flowing into Bitcoin, not rotating out into altcoins. The Altcoin Season Index, a metric that tracks altcoin performance against Bitcoin, has collapsed to just 26 out of 100. For context, a reading above 75 is needed to declare a quote-unquote altcoin season. It's walking a tightrope. Then there's the debate around the 4-year cycle. Are we nearing a blow-off top in Q4, as historical cycles would suggest? Or has the influx of institutional capital killed the old cycle? leading to a longer, more drawn-out market. No one knows for sure, and that uncertainty is keeping a lot of capital on the sidelines. And finally, there are the hurdles specific to XRP. Competition is heating up. Solana is now processing over $2 trillion in stablecoin transfers a month, dwarfing XRP's volumes. And in a telling move, payments giant Western Union, after testing XRP back in 2018 and finding it, quote, still too expensive, has chosen to launch its own stablecoin on Solana. This is a direct blow to XRP's core use case. Even technically, while XRP's 1,500 transactions per second is impressive, it pales in comparison to Solana's theoretical 65,000 TPS. This raises long-term questions about scalability, especially as Ripple pushes for mass adoption. So, where does this leave us? Well, the truth is, XRP is fighting a war on two fronts. On one side, you have the strongest fundamental tailwinds in its history, real institutional adoption, a growing developer ecosystem, and a clear path to becoming a core piece of financial infrastructure. On the other hand, you have a brutal combination of macro pressure, a market structure that favors Bitcoin, and intensifying competition. The persistent, quote, sell the news price action is a symptom of this conflict. The market is torn between the long-term promise and the short-term pain. So the remainder of Q4 will be the ultimate test. The catalysts are lined up. A final positive ETF decision could unlock billions in institutional capital. The launch of publicly traded XRP treasuries could create a permanent bid for the asset. And the Swell Conference could forge new partnerships that accelerate adoption for years to come. XRP could still end 2025 on a high note, but it still has a mountain to climb to reach it. This is no longer a simple game of hype and narrative. It's a battle for survival in an increasingly sophisticated and competitive market. The next few weeks will show us if XRP's fundamental strength is finally enough to overcome the wall of worry. So, buckle up. Okay, and if you want to understand more about the institutional forces that are reshaping this entire market, well, you could check out our deep dive on how BlackRock is quietly overtaking the crypto market right over here. And if you're wondering why Bitcoin's dominance has been so powerful this cycle, well, you can check that video out right over here. Thank you so much for watching, and I'll see you again very soon. This is Lewis, over and out.